Joining us now is Mark Chandler on the dollar, Tom O'Brien on gold, and Matt Smith on drums. No, he's on energy. Mr. O'Brien, has the gold fever broken for good, or is this something different?
I don't think it's broken for good, Tyler. What you have is this. This was a classic long-term top, though. You know, you basically had gold run 30% in 6 weeks, over highs without really any conviction behind the move. You know, when you look at Monday morning, it was a classic. Monday morning, the GLD supposedly, well, took over the SPY. That was headlines in the USA Today, headlines in the Wall Street Journal. I thought the real classic was music to my ears was when Michelle said to you Monday morning, you know, we're doing a documentary on gold, and at that point I felt it was parabolic, and I says, that's it. I says, that's a beautiful thing.
Did I not say, though? I said at the time that I thought, oh gosh, we're doing a documentary about gold. That could be a top, right?
Yeah.
Yes, exactly. That was a great quote. Because at that point I felt that was a top. Now, what happens at tops like these? I'm glad it didn't go into 2,500, because what happens at tops like these is that I suspect we're going to get back to 1,500, but, you know, a couple of years from now, I think we're going to be a lot higher. We've done two different corrections in gold in the last 10 years. In 2008, we did a 40% correction. In 2006, we did a 24% correction. So it's not the end of the world.
Rick Santelli has seen those corrections. You should trade gold.
Yeah, you know, Tom, I find it fascinating. I was looking at the end of the gold era in 79 and 80, and the CME had margins in that 2-year period that moved from $5 to $75, and there were a couple of days where we traded both ends of the range. $150 range on $800 gold. You're talking, you know, 20% swings. 20%. Yeah. Oh, yeah. It was one session. It hit the top limit and the bottom limit.
Right.
So if that's true, we could be looking at lots of $350 swings, appropriately adjusting. But my real question is ETFs. When I traded gold, it was about physical. Many of my old gold buddies are still trading, and they say, we're monetizing gold. We're creating paper. It isn't the physical gold. The GLDs, they can send you a check. You don't necessarily get bullion if you want delivery. How do you think that may have distorted, or do you think it's distorted, the ultimate path gold has taken this time around?
I follow it every night, Rick, okay? Last night, so picture this. This is amazing. Last night they had to sell 870,000 ounces in the cash market. The night before they sold 780,000 in the cash market. Now, that's one of the bullion banks that have to move it out, right? It's like a hot potato. And if you go back to 99 and 2000, when people weren't used to ETFs. Well, in the NASDAQ with the 3 Qs, when you were buying Dell, Microsoft, everything was great on the way up. When they were selling, it was a cascade on the way down. That cascade is happening right now in gold, and the ETF is going to have a big position and a problem with it, because now they have to unload a position. We all know, like, do they own all the physical? Who knows? Okay, but right now
nobody's been behind that garage door. I have my doubts, I'll tell you.
Well, they're saying they own 39 million ounces.
You know, Mark, let me switch gears here. Mark, Rick Santelli, you know, you're always many people's favorite analyzer when it comes to foreign exchange. My problem is, in the world we live in with the major currencies, the euro, the pound, the dollar, it's like a circular pool, and everybody's trying to swim out of it, and they're bumping against the wall. You know, is looking at a euro, pound, or a dollar really tell me anything anymore?
Well, I don't know. I mean, I think it often does. I mean, I think, you know, think about this, Rick. The foreign exchange market, talk about the size of the gold market, foreign exchange market's $4 trillion a day. So that turnover must be telling us something. The euro-dollar exchange rate sees about $1.5 trillion a day, so I do think it's important. And in the current context, I think we're right at the fork in the road. I think a lot depends on what Bernanke says tomorrow, but I think that the market might be poised for disappointment, and that disappointment could be good for the dollar.
Matt Smith, when it comes to energy, what's going to be the big mover here? Is it the economic data that we're going to get later today, or Ben Bernanke tomorrow?
Ben Bernanke tomorrow. Obviously, the GDP data tomorrow is going to set the tone for the day, but everyone is just waiting to hear what Bernanke is going to say. When we look at when QE2 was announced last year and when it finished in June of this year, Brent crude had rallied 47% and WTI had rallied 27%. So really, the crude market is hanging its hat on high expectations from the Fed tomorrow.
Gentlemen, thank you very much. And you know, when I close my eyes and listen to Tom, I think I'm hearing Jack Welch.